I watched my account balance drop from $12,000 to $473 in a single afternoon. And the worst part wasn't the money. It was that I had been right about the direction the entire time. Let me take you back to that day. It was a Tuesday morning, and I had done everything right. I had analyzed the EUR-USD pair for 3 hours straight, looked at every time frame from the monthly down to the 5-minute, studied the fundamentals, checked the news calendar, and I knew with absolute certainty that the market was going to drop. My analysis was flawless. Every indicator aligned. Every pattern confirmed my thesis. I felt that electric surge of confidence that makes you believe you've finally cracked the code. So I entered the trade. I risked big because I was so certain. And then I watched in horror as the price shot upward, piercing through my stop loss like it didn't even exist, leaving me devastated and confused. But here's what broke me even more than the loss itself. 4 hours later, the market crashed exactly as I had predicted. The direction I called played out perfectly. I would have made $17,000 if I had just waited. Instead, I lost everything because of one simple mistake. I was right about where the market was going, but I was catastrophically wrong about when it would go there. That's when something shifted inside me. I realized I had spent years obsessing over the wrong question. Every course I took, every book I read, every mentor I followed, they all taught me how to predict direction. Bullish or bearish, buy or sell, up or down. But nobody, and I mean nobody, taught me the secret that separates the millionaires from the broke traders. Timing. Not just any timing, but the precise, surgical timing that professional traders use to extract money from the market while amateurs bleed out betting on the same moves. This video isn't about teaching you another indicator or strategy. This is about showing you the invisible skill that determines whether you eat steak or ramen noodles, whether you grow your account or blow it up, whether you become one of the 10% who win or the 90% who quit. And I promise you, by the end of this journey, you'll never look at a chart the same way again. The truth hit me like a freight train after that devastating loss. I had been playing a game I didn't understand. I thought trading was about being smart, about analysis, about knowledge. I had studied candlestick patterns until I could identify them in my sleep. I had memorized support and resistance levels. I understood moving averages, RSI, MACD, Fibonacci retracements, everything. I could look at a chart and tell you exactly what was going to happen next. And most of the time, I was right. But I was also broke. How does that make sense? How can you be right about the market and still lose everything? This paradox haunted me for months. I would lay in bed at night, staring at the ceiling, replaying my trades in my mind, searching for the answer. I knew I wasn't stupid. I knew my analysis was solid. So what was I missing? Then I met Marcus. He was trading at the same coffee shop I frequented, sitting in the corner with 3 monitors, barely moving, just watching. I noticed him, because he was different from other traders I'd seen. He wasn't frantically clicking buttons. He wasn't staring intensely at every candle. He looked almost bored, like he was watching paint dry. But what caught my attention was the smile on his face when he closed his laptop at noon. It was the smile of someone who had just won. I couldn't help myself. I walked over and asked him the question that had been torturing me. How do you know when to enter? He looked at me with this knowing expression, like he had been waiting for someone to ask that exact question. He said something that sounded too simple to be true. He said most traders fail because they rush to be first, but successful traders wait to be right. The difference between being first and being right is timing, and timing is the only thing that actually matters. I didn't fully understand what he meant at first, but Marcus became my unofficial mentor over the next few months. He never charged me $1, never tried to sell me a course. He just shared what he had learned from losing 3 accounts before finally figuring it out. And what he taught me wasn't about fancy strategies or secret indicators. It was about something far more fundamental, something psychological, something that goes against every instinct your brain has when you see an opportunity. He taught me that the market is designed to punish urgency and reward patience. Every setup you see, every pattern that forms, every breakout that happens, it's all a test. The market is asking you one question over and over again. Can you wait? Can you resist the magnetic pull of FOMO? Can you watch other traders jump in while you sit on your hands? Can you endure the anxiety of potentially missing out? Because if you can't, if you give in to that primal urge to act immediately, the market will take everything from you. Not because you're wrong about the direction, but because you're wrong about the moment. Marcus showed me his trading journal from 5 years earlier, and it was a graveyard of premature entries. Trade after trade where he had called the direction perfectly, but entered too early and got stopped out before the move happened. He had circled one entry in red ink and written beside it in all caps, RIGHTD OAD. That single note summarized the tragic story of most retail traders. We're not stupid. We're not bad at analysis. We're just impatient. We're addicted to action. We can't stand the idea of waiting because waiting feels like we're not doing anything. And if we're not doing anything, how can we be making money? But that's the lie. The paradox that millionaire traders understand is that doing nothing is often the most profitable action you can take. Waiting is not passive. Waiting is active warfare against your own impulses, your own fears, your own need to feel productive. And that's the hardest battle in trading, the battle against yourself. Let me tell you about Sarah. She was in the same trading community as me. Brilliant mind, sharp analytical skills, degree in economics. She could break down market structure better than anyone I knew. But she blew up 4 accounts in 2 years. 4. And every single time, it was the same pattern. She would identify a perfect setup, enter immediately when she spotted it, and then watch helplessly as the market shook her out with a false move before going in her predicted direction. I watched her do this over and over. One day, after her 4th account died, she was sitting in the community Discord voice chat just crying. Not loud sobbing, just quiet tears of frustration and defeat. Someone asked her why she kept entering so early, and her answer revealed everything. She said, "Because I'm afraid if I wait, the move will happen without me, and then I'll know I was right but didn't make any money, and that feels worse than being wrong." That statement cut right to the psychological core of why traders fail. We're more afraid of missing out on a winning trade than we are of taking a losing trade. Think about how insane that is. We would rather lose money on bad timing than watch a trade work without us. That's not rational. That's pure emotion. Marcus explained it to me like this. Imagine you're hunting in the wild. You see a deer in the distance. You raise your rifle, aim, and you have a choice. You can shoot now while the deer is far away and moving, risking a miss and scaring away all the other deer, or you can wait for the deer to come closer, to stop moving, to give you a clean shot. The amateur hunter shoots immediately because he's afraid the deer will run away. The professional hunter waits because he knows patience gives him the advantage. Trading is identical. When you see a setup forming, that's like seeing the deer in the distance. The setup isn't complete yet. The entry isn't confirmed. But your brain screams at you to act now, to shoot now. Because what if you miss it? What if the trade happens without you? So you enter prematurely, and just like the amateur hunter, you miss your target and scare away future opportunities. Because now your stop loss is hit, your account is smaller, your confidence is shaken, and you're in no mental state to take the next real opportunity when it comes. The millionaire trader's secret isn't complicated, but it requires you to rewire your brain. It requires you to embrace discomfort. It requires you to do something that feels completely wrong in the moment, even though you know intellectually it's right. The secret is this: you don't enter when you see the setup. You enter when the setup proves itself. That distinction, that tiny gap between seeing and proving, that's where fortunes are made and lost. Let me break this down with a real example. You're watching gold. The chart is setting up beautifully. Higher lows, building pressure, approaching a major resistance level. You can feel the breakout coming. Every instinct tells you to buy now before it explodes. But here's what the millionaire trader knows that you don't. 90% of attempted breakouts fail. 90%. They look like they're going to break, they tease you, they might even pierce the level briefly, but then they collapse and everyone who entered early gets crushed. So what does the professional do differently? They wait for the breakout to actually happen. Not almost happen, not look like it's about to happen. Actually happen. And even then, they don't enter immediately. They wait for the candle to close above the resistance. They wait for confirmation. They wait for the market to prove that this isn't another fake out designed to trap eager traders. I know what you're thinking right now. But if I wait for confirmation, won't I miss some of the move? Won't I get a worse entry price? Yes. Absolutely yes. And that's precisely the point. You will miss the first part of the move, and that's the price you pay for certainty. That's the insurance premium you pay to avoid getting trapped by false breakouts. Think about it this way. Would you rather catch the entire move with a 50% chance of being right, or catch 80% of the move with a 90% chance of being right? The math is simple. Catching 80% of a move you win is infinitely better than catching 100% of moves that stop you out. This is what separates professional traders from gamblers. Professionals sacrifice the potential for maximum profit in exchange for maximum probability. Amateurs chase maximum profit and end up with maximum losses. Marcus taught me to think about entries like a traffic light. When you see a setup forming, that's a yellow light. The market is telling you to prepare, to get ready, to put your hands on the wheel, but not to go yet. Most traders see yellow and floor the gas pedal. They treat yellow like green. They jump in immediately because they're terrified the light will change before they go. But what happens when you run a yellow light? Sometimes you make it through safely. But often, very often, you get hit by cross traffic you didn't see coming. That's a false breakout. That's a stop hunt. That's the market punishing your impatience. Now imagine waiting for the green light. The setup completes. The candle closes. The confirmation appears. Now you go. Now you enter. Is the intersection completely clear? No. Trading never offers complete certainty. But the probability of safe passage is dramatically higher. You're not gambling on yellow. You're entering on green. And over hundreds of trades, that difference compounds into the gap between success and failure. One of the most painful truths I learned is that the market specifically designs traps for impatient traders. It's not accidental. It's not bad luck. The institutional players, the smart money, they know retail traders are impulsive. They know we're watching the same patterns. They know we'll jump in at the first sign of opportunity, so they purposely create false signals to trigger our stops before the real move happens. They hunt stops. They fake breakouts. They shake weak hands. And who are the weak hands? The traders who enter too early. The traders who can't wait for confirmation. The traders who treat yellow lights like green lights. You are literally giving your money to professionals who are more patient than you. Every premature entry you make is a donation to someone who waited longer. That's not a metaphor. That's the literal mechanism by which money flows from retail traders to institutional traders. Your impatience is their profit. Let me tell you what happened when I finally internalized this lesson. I was watching the EUR-USD again, same pair that had destroyed my account months earlier. I saw a perfect setup forming. Everything aligned. My old self would have entered immediately. My hands actually moved toward the mouse. I could feel the adrenaline. I could feel the fear of missing out. But then I heard Marcus's voice in my head. Wait for the candle to close. Wait for confirmation. Wait for the green light. So I waited, and it was torture, pure psychological torture. The candle was climbing. It looked so strong. It felt like the move was happening right now, and I was just sitting there like an idiot, watching it happen without me. Every second felt like an hour. My heart was pounding. Sweat was forming on my forehead. This is the moment where most traders break. This is the moment where discipline either holds or shatters. I forced myself to wait. The candle finally closed, and it closed strong, breaking through resistance cleanly. That was my green light. I entered, and you know what happened. The trade went straight to profit. No drawdown. No stop hunt. No false reversal. Just clean, directional movement in my favor. I made back half of what I had lost in that previous disaster, and more importantly, I proved to myself that patience works. But the story doesn't end there, because the market always tests you. 2 days later, I saw another setup. Same pair, similar pattern. But this time, when I waited for the candle to close, it closed as a rejection. The breakout failed. The candle reversed and closed back inside the range. My old self would have already been in that trade, would have already been stopped out, would have already lost money. But because I waited, because I demanded confirmation, I never entered. I saved myself from a losing trade by doing nothing. And that's when it finally clicked. Timing your entries like a professional isn't just about catching winners. It's about avoiding losers. It's about not being in the market when the market is lying. It's about preserving capital when conditions aren't favorable. The millionaire trader's secret isn't that they catch every move. It's that they avoid most of the traps. They're not better at predicting. They're better at waiting. They're better at doing nothing until doing something becomes obvious. Now let me address the voice in your head right now, the voice that's saying, "But what about all the times where if I wait, the move happens too fast and I actually do miss it?" That voice is valid. That fear is real. Yes, sometimes you will wait for confirmation, and the move will happen so quickly that by the time you get your confirmation, the best entry is gone. That will happen. Accept it right now. But here's what you need to understand. Trading is not about catching every opportunity. It's about catching enough opportunities with high enough probability that you consistently grow your account over time. If you catch 7 out of 10 high probability setups and avoid 9 out of 10 false signals, you will become wealthy. If you catch 9 out of 10 setups but also fall for 7 out of 10 false signals, you will go broke. The math is brutal and simple. It's better to miss some real moves than to enter most fake moves. Your job is not to trade everything. Your job is to trade well. Marcus once told me about a concept he called the patience premium. He said every time you wait for confirmation instead of entering immediately, you're paying a small premium. That premium is the few pips or points you miss from the initial move. But in exchange for that premium, you receive insurance against false signals, better win rate, lower stress, and longer account survival. He said to think about it like insurance on your house. You pay a small amount every month for protection against catastrophic loss. Most months, nothing bad happens and the insurance feels like wasted money. But the 1 month your house catches fire, that insurance saves your entire life. Waiting for confirmation is your trading insurance. Most of the time, the trade would have worked even without confirmation, and the insurance feels unnecessary. But the one time it's a false breakout, that patience saves your account. And over a lifetime of trading, your account survival is all that matters. You can't compound profits if you keep blowing up accounts. The traders who become millionaires aren't necessarily the ones who catch the biggest moves. They're the ones who survive long enough to catch enough moves. Survival requires patience. Patience requires timing. Timing creates wealth. Let me give you a practical framework you can use starting today. I call it the 3 confirmations rule, and it completely transformed my trading. Before you enter any trade, you need 3 green lights. Not 1, not 2, 3. First confirmation is chart structure. The setup must be complete. The pattern must be fully formed, not forming. Formed, past tense. Don't. If you're trading a breakout, the price must have actually broken the level, not just touched it or approached it. If you're trading a reversal, the reversal pattern must be complete with both signals in place. Whatever your strategy is, the structural requirements must be fully met. That's green light number 1. Second confirmation is candle close. The candle that completes your setup must close in your favor. Not just wick in your favor. Close. The body of the candle must finish above resistance if you're going long, or below support if you're going short. An open candle is a liar. An open candle can tell you any story and change its mind at the last second. Only closed candles reveal truth. That's green light number 2. Third confirmation is timing context. You must be trading during a high volume, high liquidity session. No entries during dead hours. No entries during lunch lulls. No entries during Asian session drift, unless you're specifically trading Asian pairs. Your setup can be perfect, your candle close can be perfect, but if you're trading at the wrong time of day, you're still gambling. That's green light number 3. When all 3 lights are green, you enter. Not before. Not if 2 out of 3 are green. All 3. And here's what's beautiful about this framework. It sounds restrictive, and it is, but that restriction is your edge. Most traders enter with 0 confirmations. They see something that looks like an opportunity and immediately jump. By requiring 3 confirmations, you're automatically putting yourself in the top tier of disciplined traders. You're forcing patience. You're building timing into your process. I tested this framework for 6 months before I fully trusted it. I tracked every trade I took and every trade I almost took, but didn't because of missing confirmations. The results were staggering. The trades where I had all 3 confirmations had an 81% win rate. The trades where I ignored the framework and entered with only 1 or 2 confirmations had a 43% win rate. Same strategy, same analysis, completely different results based purely on timing discipline. That data changed me. I stopped seeing patience as something that makes me miss trades. I started seeing patience as the actual edge itself. The waiting is the strategy. The timing is the secret. Everything else is just setup. But knowing this intellectually and actually executing it emotionally are 2 completely different battles. The hardest part of timing your entries like a professional isn't learning the rules. It's following the rules when your brain is screaming at you to break them. Let me describe the psychological warfare that happens in those moments when you're waiting for confirmation. You see the setup forming. Green light 1 is close. Your analytical mind knows you should wait, but your emotional mind is flooding your system with chemicals. Fear of missing out releases cortisol. The possibility of profit releases dopamine. The urgency to act releases adrenaline. Your hands start moving without conscious thought. Your heart rate increases. Your breathing gets shallow. You start rationalizing. You start telling yourself stories. Maybe this time I don't need all 3 confirmations. Maybe this time the pattern is so obvious I should just go for it. Maybe this time waiting will make me miss it. These thoughts aren't rational. They're addiction. You're literally experiencing the same neurological processes as a gambling addict sitting at a slot machine. The market has triggered your reward system, and your brain will do anything to pull that lever. This is where most traders lose the battle, not in their analysis, but in their impulse control. You need to understand something crucial about your brain. Your prefrontal cortex, the rational part that understands patience and discipline, is incredibly weak compared to your limbic system, the emotional part that craves immediate gratification. In moments of stress or excitement, the limbic system takes over. You literally become less intelligent. Your IQ effectively drops. This is why you can know exactly what you should do and still do the opposite. This is why you can have a perfect plan and still break it. Your emotional brain hijacks your rational brain. So how do you win this battle? You can't fight it with willpower alone. Willpower is finite. It depletes throughout the day. By the time the New York session opens, if you've already been staring at charts for hours, your willpower is exhausted. You need a system that doesn't rely on willpower. You need external constraints. Here's what worked for me. I created a physical checklist that I printed and laminated. Before I can click the buy or sell button, I must physically check off all 3 confirmations with a dry erase marker. Chart structure complete. Check. Candle closed in my favor. Check. Correct time session? Check. Only when all 3 boxes are checked am I allowed to enter. This sounds absurdly simple, and it is. But it works because it introduces a pause. It forces a 10-second gap between seeing the setup and acting on the setup. And in those 10 seconds, my prefrontal cortex has time to catch up to my limbic system. My rational mind has time to override my emotional impulse. That 10-second pause has saved me thousands of dollars in avoided bad entries. Sometimes I check the first box, then look at the candle, and realize it hasn't closed yet. I literally cannot check that box. So I have to wait. And in that waiting, the emotional urgency dissipates. The FOMO fades. I regain control. The checklist becomes my external prefrontal cortex, compensating for the weakness of my internal one. Another technique Marcus taught me was the countdown method. When you see a setup that triggers your emotional response before you do anything, count backwards from 10. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Out loud if possible. This serves multiple purposes. First, it interrupts the emotional momentum. You can't be impulsive if you're forcing yourself to count. Second, it activates your prefrontal cortex by giving it a task. Third, it creates time for the setup to evolve. If the setup is real, it will still be real after 10 seconds. If it's false, it might reveal itself as false during those 10 seconds. I've had countless experiences where I started counting, and by the time I reached 3, the setup invalidated itself. The candle reversed. The breakout failed. The momentum died. That 10-second countdown saved me from disaster. And on the times where I count down and the setup is still valid, I enter with confidence because I know my entry isn't based on impulse. It's based on patience. Let's talk about what happens after you finally master patient entries. Something unexpected occurs. Your entire relationship with trading transforms. When you're constantly entering prematurely, trading feels like war. Every candle is a battle. Every tick is life or death. You're stressed, anxious, watching every movement with white knuckles and shallow breathing. But when you enter with proper timing, after confirmations, during good sessions, trading becomes almost boring. You enter and the trade just works. There's no drama, no huge drawdown, no stop hunting, no constant fear of reversal. The trade goes into profit and stays there. You can step away from the screen. You can go make coffee, take a walk, live your life, because you entered at a high probability moment with the wind at your back. This is what professional trading actually feels like. It's not exciting. It's not adrenaline pumping. It's systematic, patient, and honestly kind of boring. And that's exactly what you want. If your trading feels exciting, you're gambling. If your trading feels boring, you're doing it right. Marcus showed me his trade log from last year. He took 83 trades total for the entire year. 83 trades. That's less than 2 per week. And he grew his account by 147%. How is that possible? Because every single one of those 83 entries was timed perfectly. He only traded during London and New York sessions. He only entered after full confirmation. He only risked when probability was heavily in his favor. He spent 99% of his time waiting and 1% executing. And that 1% paid for everything. Compare that to Sarah, who took 730 trades in the same year and ended down 30%. 730 trades. That's almost 3 per day. She was constantly in the market, constantly acting, constantly busy, and she lost money. More activity created worse results. Less activity created better results. This is the paradox of professional trading. The less you do, the more you make. The more you wait, the more you win. The market rewards patience exponentially. Now I want to address a question you might be asking. What about scalping? What about day trading? Don't those require quick entries and lots of trades? Yes and no. Even in short time frames, timing principles remain the same. You still need confirmation. You still need candle closes. You still need high probability setups. The only difference is the time frame you're measuring those confirmations on. If you're scalping on a 5-minute chart, you wait for the 5-minute candle to close. You wait for 5-minute confirmation. The principle doesn't change. What changes is the speed of execution. But even speed requires patience. The fastest traders in the world are fast at executing confirmed setups, not fast at gambling on unconfirmed ones. There's a massive difference between quick execution and premature entry. Quick execution means you can enter within 2 seconds of getting your confirmation. Premature entry means you enter before confirmation exists. Professional scalpers are still patient. They're just patient at a faster time frame. They've compressed the 3 confirmations rule into seconds instead of minutes, but they still demand confirmation before they act. Let me share one final story that ties everything together. 6 months after Marcus started mentoring me, I had rebuilt my account to $15,000. Not back to where I started, But getting there, I was following the timing principles religiously. 3 confirmations, candle closes, session awareness, patience. One day I saw the perfect setup, everything aligned. All 3 green lights, I entered. And within 5 minutes the trade was up $300. I was elated. This was working. This was real. Then something shifted. The candle started pulling back. The profit started shrinking. $200, $100, $50. My heart started racing. The fear crept in. Should I exit? Should I hold? The trade was still valid. Nothing had invalidated my entry. But the pullback was triggering my trauma from previous losses. I could feel myself starting to panic. I closed the trade at $50 profit because I couldn't handle the anxiety. 2 hours later, that same trade would have been worth $2,000. I had the right entry, the right timing, the right setup, and I still lost 97% of the potential profit because I couldn't handle the waiting after entry. That's when I realized timing isn't just about entry. It's about exits too. It's about position management. It's about having the patience to let winners run after you've entered them correctly. But that's a different lesson for a different video. The point I'm making is this. Timing your entries like a millionaire trader is just the first skill. It's the foundation. But it's the most important foundation, because if you can't get the entry timing right, nothing else matters. You can have the best exit strategy in the world, but if you enter at the wrong time, you'll be stopped out before your exit strategy ever gets a chance to work. You can have perfect risk management, but if you enter prematurely, you'll take losses that proper timing would have avoided. You can have brilliant analysis, but if you can't wait for confirmation, that analysis becomes worthless. Entry timing is the gatekeeper skill. Master it, and everything else becomes easier. Fail at it, and nothing else can save you. So let me leave you with this. Tomorrow, when you sit down to trade, I want you to try something. Don't trade for the first hour. Just watch. Watch the market move. Watch setups form and either fail or succeed. Watch how many false breakouts happen in the first 30 minutes of a session. Watch how many traders probably got trapped by those moves. Just observe without acting. Then, after an hour of pure observation, look for one setup that meets all 3 confirmations. Just one, wait for it. No matter how long it takes. Even if it takes all day. Even if it never comes. Wait for that one perfect setup where chart structure is complete, the candle closes in your favor, and you're trading during a high-quality session. When you find it, when all 3 lights are green, then and only then, you enter. Take that one trade and then stop for the day. Win or lose, you stop. Because the goal of this exercise isn't to make money. The goal is to prove to yourself that you can wait. The goal is to experience what it feels like to enter with perfect timing. The goal is to start rewiring your brain from impulse to patience. Do this for 1 week, 1 perfect entry per day. Nothing more. Track the results. I promise you, you will learn more from this 1 week experiment than you learned from the last 6 months of random trading. You'll start to feel the difference between impulsive entries and timed entries. You'll start to notice how much calmer you feel when you enter with confirmation. You'll start to see your win rate climb. And most importantly, you'll start to understand what the millionaire traders know that the broke traders don't. It's not about being smarter. It's not about having better analysis. It's not about working harder. It's about timing. It's about waiting. It's about letting the market come to you instead of chasing the market. It's about being the patient hunter who waits for the clean shot instead of the desperate hunter who fires randomly into the woods, hoping to hit something. This is the secret. This is what changed my trading. This is what saved my account and eventually grew it beyond what I thought was possible. And now it's yours. The question is, will you use it? Will you have the discipline to wait when every instinct screams at you to act? Will you have the patience to watch opportunities pass, knowing that better opportunities are coming? Will you have the courage to do nothing when doing something feels so much more comfortable? That's the real test. That's what separates millionaire traders from everyone else. Not intelligence. Not access to information. Not even skill. Just patience. Just timing. Just the willingness to wait for the perfect moment instead of settling for the first moment. The market will always be there tomorrow. The opportunities will always come back around. But your account has a finite number of lives. Every premature entry costs you one of those lives. Every patient entry preserves them. Protect your capital by protecting your timing. Master timing, and you master trading. It really is that simple and that difficult.